All right. Hello, everybody. Welcome back to another market close. It is Wednesday, April 3rd, 3:46 p.m. And we've got a lot to talk about. Markets have reversed over the past 2 days, and there's two reasons why they have reversed. We're going to be talking about those two reasons. Number one is ISM data was good. Jobs data was good, but not that good for inflation. So the paradox between both of these pieces of data is what we have to analyze for why the market kind of did a U-turn around like 12 p.m.-ish when some of the new data came out, and also when Powell started talking, gave a speech at Stanford today. Didn't say anything that different than what he's been saying, but we got to talk about that. Got to talk about Tesla that held up pretty strong today. Got to talk about Palantir as well. Try to make to that $23 level. I got to 23 on the dot for like a minute and then fell back down to the 2270 range. So we'll discuss all of that and go further as well and talk about Bitcoin. The Vlad interview, yes, is officially out. So it's done. We got it out. I have a lot to say about it. So here's one question I want to ask you guys, and then we'll go further from here. Do you guys want to react to the interview at the end of the market open? So market opens, ends around 4 or close at 4:45. We can watch the interview together. For those that haven't watched it, we can watch it. If you want to watch it again, then we can watch it again. I've listened to it basically 3 times, and I have a lot of thoughts on how the interview went. Overall, the feedback I'm getting is pretty good. I mean, I got a lot of people reaching out saying they like the flow, they like the tone, they like the aggressiveness on certain questions. They like that I let the dude talk, that I just didn't interrupt him like a lot of people do. And that was my big goal, is like, I just want to let him speak and give his story. So let me know if you guys want to do that at the end. 4:45 to 5:45, we can live react to the podcast. I can stop it in between, give you guys the juicy details and stories, because we got to talk for 20 minutes before the podcast started, because the video editor Dan, who I'm texting with right now, this guy did an amazing job color grading and editing all the angles. He had to put in a lot of work, and he really came through. He was still setting up the lights. So for 20 minutes, I was just sitting there, and I think that's why the interview went well also, because you just got to know the guy a little bit for 20 minutes. You got to laugh a little bit before the interview started. So I can tell you guys a lot of those stories, and we can keep going from there. But interview is done. All right. Seems like you guys said yes. Okay. So at 4:45, we'll live watch the interview and the podcast. If anyone hasn't seen it, you'll watch it with me. And if you have seen it, we'll get to watch it again and analyze it a little bit more deeper. Did you hire everyone? No, this was his team. This was Vlad's team. I'll talk more about it later at 4:45, but this was his entire team that I coordinated with for the past month to get this done. Remember when I was on the market open and I was saying, yeah, guys, the S&P is just the S&P. I was looking at this iPad right here, and on this iPad, I got a message from Robinhood Communications on Twitter saying, "Hey, Amit, do you want to interview the CEO and co-founder of Robinhood, Vlad?" And while I'm speaking on the market open in front of 1,000 people, I'm like stuttering over my words, because in my head, I'm just like, I need to respond to this like now. So that was the day. I think that was early February. We got that message. And then we just set it up from there. So I have a lot of stories and thoughts and sort of inside juice I want to say on that. So at 5 p.m., we'll discuss and we'll keep going from there. Was it before or after the event? It was the day after the event. So the day I missed the market open after the event is because I was in New York, and I wasn't in New York just to get lunch with Adam. I was in New York to do this interview in the morning, and then I got lunch with Adam, and it was a cool day. It was awesome. So we'll talk more about it after the market close. Okay, so let's start off with the really, really big news of the day, which is that markets have reversed. Markets have reversed in a pretty interesting way. So let me pull this up right now, and let's get into it. Now, the reason markets reverse is because we got some data, and that data was pretty good. It was the data that everyone was looking for, and it was the data that ended up coming out. Robinhood right now hit 1940 at one point, 1929, up about 0.44%. This thing was at like 1901 as the market opened. As you can see on the left-hand side of my screen, stocks are green. Look at Tesla. Tesla's 168. It's up 1% today. It was down 7% yesterday. It ended up only being down 5% yesterday. So the brunt of it has kind of been stabilized at 168. We'll talk more about Tesla, but if those delivery numbers couldn't crush Tesla down to the 150s, I'm actually curious what will, right? Like those delivery numbers were the worst delivery numbers since 2022. If that couldn't bring Tesla back down to the 150s because there were too many people buying the dip, I'm very curious if bad news is baked into the Q1 earnings and the market's not going to have the horrific reaction that everyone's expecting. So it's going to be interesting to see how that plays out when it comes to Tesla. Ian says, Amit, does your sister know who Vlad is? I gave my sister the podcast. My mom is on her second rerun watching it. My sister was like, oh yeah, I was skipping around a little bit because it got boring. I was just like, all right, dude. I was just like, dude, in our world, this matters. It's a big deal. But in the context of normal people that don't give a shit about Robinhood or stocks or investing, she's on spring break. She works at a school. She's an administrator. Like, she's worried about when's the next episode of her latest show on Netflix coming out, right? So for her, she's like, oh, that's cool. It was kind of boring. But for me, I'm like, and all of us were like salivating to try to understand more of it. It is what it is. People have different interests, but she's pretty excited about it. It's pretty cool. ARK Innovation 4790, Coinbase 251, Tesla 168, PayPal 65, Taiwan Semi 141. As you can see, the losers on the day are the stocks that are down. Nvidia down about 0.55%, nothing that crazy at 889. But then CleanSpark, that's hit, down 3.39%. It's weird. CleanSpark's down, but Coinbase is not down, right? The traditional crypto stock's not really down. CleanSpark, 26 cents away from the 15. So that one has gotten pretty, that one's gone down almost 35% since they did the at the money offering. Obviously, Bitcoin fell. Bitcoin tried to reclaim 66.8 and it fell back down to 65.9 right now, up from 64 in the morning. Snowflake 153. Snowflake has just gotten hammered, has not been able to find the footing to get back into the 170 range. Snowflake now down from 230 to 153 post earnings. And the CEO did buy $5 million worth of shares last week. I think he's going to have to buy some more, or the company's going to have to execute to get the market more excited about Frank Slootman leaving in for the revenue guidance going down to 22%. Chipotle down about 0.44%. DJT down about 4% on the day. Donald Trump's back. MicroStrategy up 1.79. Reddit down 6.72. And then Google 156 trying to get back to that all-time high, or I think 157 is the 52-week high. So Google, which hit it today, in that 156 range. Google just doing really good since they fell to the 130s. Google actually performing better than most of the Mag 7 right now. Okay, so let's talk about the macro. Let's talk about what happened with the macro. So this is what's going on with the macro and why the market actually moved higher. We got two pieces of data. The first piece of data was ISM data. What is ISM? Particularly ISM for services paid. It came in at 53. Now, and this is PMI. On all of the PMI indices, there's a variety of different indices. If you're above 50, the economy is expanding. If you're below 50, you're contracting. So we were at 53. Obviously, the economy is expanding. GDP is growing. People are buying. People are spending, yada, yada, especially on services, right? This is like paying for different parts of the entire job market and how people are actually providing goods and labor. That went to 53. The market was expecting 58. Now, why is that good? Because we're expanding, which is good. So we're above 50. But if we were at 58, the argument is, well, we're expanding too aggressively and we need inflation to come down. Right now, that sucker's still at 3.1. We need to get it to at least 2.6, 2.7, I would argue, at the minimum for the Fed to even think of cutting rates. And this ISM services data that came out showing the market expected 58. We were a whole 5 points below that at 53. Immediately, I think that came out around 9:50 a.m., markets reversed. Because the logical syllogism is, okay, if that's down, that means inflation will come down. Prices are starting to come down. The literal prices people are paying for services are coming down as per that index. Definitely less than what we expected, which is great. Because that means inflation should start to come down. It's at least one of the core pieces of data the Fed is looking at for inflation to come down. Now, outside of that, we got private payroll data. We had 184,000 jobs. I think about 10 to 15,000 jobs more than we expected. That's good because it means people have a job. They're going to be able to spend money, but that's not good because if they have money, they're going to be spending on the economy. So on one hand, Jay Powell's like, all right, everyone has a job. I don't need to cut rates. People have jobs. There's 184,000 new jobs, like give or take 6,000. Maybe the data is not the best, whatever. People have decent amount of jobs. So I don't need to cut rates. Why would I cut rates? Why would I risk the chance of accelerating inflation? On the other hand, I'm seeing some really valuable data that inflation is starting to come down in the context of ISM services. So I think Jay Powell right now is struggling with the fact that inflation is coming down, but it's not coming down aggressively enough for him to lower the rates. And people still have jobs. And this idea of the Goldilocks zone where people don't have to lose their jobs for inflation to come down, maybe that would end up being a real thing. And that's why the market is reacting the way it's reacting. And Jay Powell also was at a Stanford speech today. And he basically said the same thing he's been saying around inflation. And the idea was, yeah, we're going to wait to see the data. And once we see the data, we will keep going from there. And so he didn't say anything too crazy, but that data we got this morning about ISM, it's one piece of the puzzle that Jay Powell needs to see more of. that is what got markets a lot more exciting. Okay, so that's the take on the macro. I just got a notification. So Vlad has quote tweeted the podcast. So I'll show you guys that right now. This is the caption. He said, "From one fan to another, thank you for having me." That's cool, dude. That's pretty cool. That's pretty cool. That's dope. That's a dope caption. That's a dope one. So yeah, we'll react to that podcast at 5 p.m. We'll go from there after the market close. But that's pretty cool. I'm gonna retweet that one. I'm gonna retweet that one. I don't even know what to say to that, so I'm not gonna respond to it yet. But it was pretty cool. It was a good one. It was a fun one, and we'll react to it at 5 p.m. after the market bell. But in general, that's what we've got looking on right now when it comes to job data. Let's go to Tesla. We got another downgrade to 122. Let's take a look at that, and then we'll get ready for the market close in 3 minutes.
This time from the desk of Guggenheim, they cut Tesla's target down to 122 and reiterate a long-standing sell rating. Joining us this morning is the analyst behind that call, Guggenheim director Ron Yessikov. Ron, it's good to have you back. You're not the first to suggest that maybe yesterday's numbers were not a clearing event. Why not?
Yeah, I think when you dig through the numbers and we go through painstaking effort, I would say, to build our delivery forecast, the real implications of the downside yesterday were weak U.S. demand. Some form of supply on the Model 3, but mostly, versus our estimate at least, we believe it was Model Y demand in the U.S., where we've seen inventory build in the first quarter. And if our estimates are correct, U.S. units were down something in the range of 20 to 25% year over year. I think even if we adjust for the Model 3 changeover, which has been well discussed, I think at this point, the implications for that look far more structural than seasonal or cyclical in terms of.
What he's saying here is that this is not a demand problem. They have enough inventory. This is not a supply problem. This is a demand problem. And honestly, I've been reading some reports today. I think this is not the craziest argument that there is a bit of a demand problem here because they have a shit ton of inventory. Like it might not be a supply issue. Nonetheless, I don't know if 122 is going to happen for Tesla.
So the demand outlook. And then as you look to the medium term, I think beyond the first quarter, which is understandably messy at this point, structural issues in China, and then I think reason to be cynical or at least skeptical of the Model 2 and the ultimate end market viability of the Model 2 if electrification excitement gets pushed to the right. And in China, there's certainly already vehicles competing at that price point and taking considerable market share.
Right. So in order for the stock to bottom, is it about estimates for Q2 delivery coming down, or are we now talking about most of the street having to come to grips with a negative year-on-year number?
Okay, we'll let him finish after the market close. But yeah, there is an argument to say in the context of Tesla, well, wait a second. If they have the inventory, then why exactly are they having issues when it comes to the demand, right? I mean, if they have the supply, they should be able to supply the demand. But if they're not getting their deliveries up, then maybe the demand is faltering a little bit. Wednesday, April 3rd, 4 p.m. at 5 p.m. or 4:45, we'll be reacting to the Vlad interview live on the channel. Thank you, everybody, for being here. Stock market's now closed. All right, market is closed. Let's see what we've got going on in the market. Here we go, 2270 on Palantir. So that's what we get for the market close, 2270 right now. That it was down 0.11% on the day, nothing too crazy. That's where we kind of started. We did get to that 23 level, but still being at 2270, not too bad. SoFi, oh, I forgot. We got to talk about SoFi. So we'll talk about SoFi in just a little bit after we talk more about Tesla. But SoFi, nice 5% day. This is what we needed on SoFi. I bought more options yesterday. So seems like was a decent buy. Hopefully we officially got the bottom. Most of my options I bought from 680 to 720. Those were the prices I got the options at. We'll see how it goes from there. But they got a nice upgrade to $10. We'll talk more about that in a little bit. ELF down 11%. The market reversal was not enough to help ELF. What happened with ELF? Well, Ulta Beauty showed lower sales or guided for lower sales, and the market pretty much tanked Ulta. Look at that, down 15%. Probably not going to grow at 5% year over year, which is what they projected a couple months ago. And then ELF was one of the collateral damages as a result of that because they're in the beauty industry as well. NVIDIA, 890, Robinhood, 1923. up 0.05% on the day. Arc Innovation 47.92. Coinbase 251. Nice 2.33% move on the day for Coinbase. Let's go to the crypto companies. MicroStrategy up 1%. Bitfarms up 0.68%. Hut 8 Mining up 3.3%. Riot up about 0.29%. CleanSpark, again, down 3.38% on the day. Marathon down 1.55%. And then Coinbase is up 2.3%. The Bitcoin miners didn't do that well today outside of Cypher. A lot of them were down on the day. Cypher was up on the day, but the rest of them were down. The Bitcoin stocks like MicroStrategy and Coinbase ended up doing a bit better in Robinhood outside of some of the mining companies. Let's go to Mag 7. Let's see those. Apple up on the day, 0.48%. Microsoft down a little bit. Meta up 2%. Not bad. Google, again, just crushes today. Wow. New all-time high for Google after hours, 158.34. Look at Google run. 1.3% after hours. Wow. Google's up. Google is up. Not bad at all for Google. Amazon 182.48. That's doing well. Tesla 168. So again, this whole idea that we were supposed to have this incredible crash, which look, maybe it's going to happen. One piece of good inflation data reminds the market, oh, wait, these companies are putting up numbers. They're putting up earnings. The Stephen Cohen, the CEO of Point72, the big hedge fund, he even said today, we'll listen to him talking a little bit, that he doesn't think there's an AI bubble. He thinks things are actually going pretty damn good. And he thinks that the market is pretty resilient because companies are putting up the numbers. And so we're in a world in which if companies are putting up the numbers and you get good inflation data, the question becomes, why should you be bearish? So all the bears over the past 2 days that were saying people have to take their profits, everything is done, that is legitimate. But the idea that is going to deter people from investing again when they see good data, it doesn't feel like 2021, 2022 in that respect. And good data definitely makes it a little bit more exciting for people to take a look at the equity markets. And that's what we're seeing. That's what we're seeing right now. I'm Beneficial says Google is my second largest position. Why is Google flying? I actually don't know why Google's flying. I haven't had a chance to look at Google today. I do know why Apple was up a little bit today. Here is some breaking news on Apple that just came out. And by the way, I think Google is up just because it got sold off like crazy, and the market's like, you know what? This is the lowest PE of all the Mag 7. Let's take a bet on this. It's a lower PE than Tesla, by the way, as well. So Apple is exploring home robotics as a potential next big thing after its car project fizzled. Engineers at Apple have been exploring a mobile robot that can follow users around their homes. Wow, that broke just 40 minutes ago. Wow, there you go. So Apple potentially thinking that robotics are the next big thing. Now, I think we have to take this with a grain of salt. Obviously, they were super excited about EVs. That didn't play out. Robotics, I am a bit more bullish on, given some of the companies that I've invested in. But Apple focusing on that, we would have to see them really dedicate some time and energy to this, because this is not an easy thing to do, especially if it's a consumer robotics company. First of all, I'm curious, what would they want? Like, would they want like a real humanoid robot? Would they want like a pet robot dog? Would they want like a Siri robot that follows you around? I don't know. There's a lot of opportunities, but as we can see, you can interpret this news in two ways. Either one, oh my God, Apple's getting into robotics, super bullish, or oh my God, Apple doesn't know what the fuck they're doing. They're exploring every different thing. Generative AI, Google, Gemini, AI, iPhone, now robotics, the car is gone. That's a bad thing. You can interpret it one of two ways. And I guess over the coming months, we're going to see how the market ultimately interprets that. Okay, Google's moving up. Google's moving up. Someone tell me why Google's moving up. Let me Google the news. Wow, that's why Google's moving up, because I just said, let me Google why Google's going up. This damn search engine is hard to replace. Okay, Google stock. Let's pull it up. Any news I'm looking at? No, nothing crazy for me. Nothing here. I mean, there was that news that Google is going to delete millions of searches for in incognito mode. I think you guys saw that. So to settle some court case, they're going to get rid of tons and tons of data that they've had for a long time. Not really going to affect the company that much. If anything, it might be a little bit of a disadvantage, but it shouldn't be that big of a deal. But I don't know why Google's running. I don't know. No one in the chat knows. Google considering charging for AI search engine. Is that news though? We've known that for a long time. Right? Like they were going to have to monetize Gemini somehow. We knew that for a while. It doesn't seem like that's I don't know. It didn't seem like that's a big deal. Maybe they're becoming more official. Oh, by the way, Spotify, and then we'll go back to Tesla, then we'll do SoFi. Spotify's up 8% on the day. Why? Spotify's raising their subscription by a couple bucks. So Spotify at 57 billion market cap, up 10% on the day, primarily on this idea that they will find a way to become profitable. My biggest issue with Spotify is that they've never been profitable because the music labels take so much money from them. They are growing users at a phenomenal rate. They add almost 30 million users every 90 days because it is just the app that people go for audio. If they can start inching out a profit because they've got the users and the network effects, then Spotify is going to be one of those companies that theoretically can do very well. Kathy Wood, got to give her credit. It was a good buy yesterday. She bought 5,000 shares of Spotify. She bought it in the FinTech fund. I don't know why. Maybe she thinks that finance podcasts are going to be big on Spotify, but she bought it and it goes up today 8% on this new subscription news of a price upgrade or a price increase. So not bad at all for Spotify. Google just bought OpenAI. Okay, that's that's the reason. Let's go back to Tesla. So I want to finish what Gutenham says about 122 price target. Then we got to talk about SoFi, and we also have to talk about Amazon. A little bit of a controversy came out about Amazon yesterday. It didn't affect the stock today, but something I didn't get to cover yesterday. So we'll finish up on Tesla, then we'll do SoFi, and then Amazon. Here we go.
Yeah, I think it's a great question. So we're at a negative year-over-year expectation this year. Our view is, and I think Tesla's starting to show this, that the demand response to price cuts has not been what they expected it would be. And the net of that is they're going to lean into advertising and accept the near-term implications of lower volumes. So I think it's more than the second quarter, to be clear. I think it's a full year reset of numbers and potentially 2025 as well, because they don't really have new products next year. We're about 40% below the street next year for EPS. And then if you have lower volume, you have lower cost reductions per unit. Gross margins look challenging, I think, for longer. And the free cash flow implications of negative volume growth or flat volume growth in auto are pretty unfavorable because of the way accounts payable and accounts receivable work with how Tesla pays their suppliers.
What would change your mind?
I think interest rates could help. It's certainly been talked about as a material drag on the business.
And I agree, interest rates could help, but the problem is, guys, they have 42,000 more cars in inventory that they haven't had for the past couple of quarters. So, like, interest rates can help, but at the end of the day, they have enough inventory. The problem here is demand. Maybe people are choosing other vehicles over Tesla. I don't think that's definitive yet, but maybe that is something that's stopping Tesla from delivering as many as they need to deliver.
I think it's more narrative than actual the sole issue. Obviously, FSD attach rates post this trial period improving could really help the story and the narrative. I think we're skeptical, and history would show that connected services in automotive tend to not be widely adopted, particularly ones that cost as much as FSD does. But that would materially change the story. I think otherwise, I think we have energy, charging, automotive pretty well captured in our model. And I think the market is underestimating the kind of structural risks and sea change that's happening in China. BYD often gets talked about as an issue. It goes well beyond BYD today. I think
So, Elon, by the way, I forgot to show you guys this. Today's been a kind of cool day on Twitter. So Elon liked my post on Twitter today. So I posted, I just posted what Kathy Wood said. That's all I said. I said, okay, so Kathy on CNBC, host, where do you see Tesla in 5 years? Kathy says 2000. We watched this in the morning. That would put Tesla at about $5 trillion market cap. Now, Elon liked this post, and he responded to Ross Gerber, basically saying that the board of directors needs to be fired, all that stuff, by saying what that guy that we were just listening to say, that it's more than a BYD problem. So Elon said Ross Gerber is an idiot because BYD sales also dropped 42% from last quarter. So it's a tough quarter for everyone. The guy that we were just listening to, the analyst on CNBC, he said it's not just a BYD issue. There's a host of things going on right now. And so I think over the next 6 to 10 months, we're going to figure out, is it a BYD issue only? As Elon's basically proclaiming in this tweet, saying, look, don't blame us, blame the whole industry. Or is it outside of BYD? Are there other factors going on that are reducing Tesla? On top of that, Ross doubled down on this argument here. So I posted this later. This was after the market open. I saw Ross say this. He said, basically, Tesla can't sell its cars due to Elon's behavior. Let's stop blaming the Houthi rebels or German environmental terrorists or a recession that never came or interest rates. Only one person is responsible for this, and that's Tesla. Now, I asked people, hey, do you think he's right or wrong? And most people said he's wrong, but there were some people that said, so this person right here says, Ross is right. Elon has alienated a large number of folks that want to buy EVs, aka liberal Democrats that believe in climate change. It's bad business, and honestly, it's just plain stupid. I'm not going to argue that Elon hasn't alienated people. My point in the context of Ross's tweet is that I do not think Elon's alienation, which, if you're a Tesla shareholder, you just have to put up with. I don't think that is the reason Tesla's down 35% year to date. I think it has to do with Houthi rebels. I think it has to do with the Berlin factory. I think it has to do with interest rates. Yes, they have a little bit more supply than demand, and that could be an issue. But if interest rates were at, 1 or 2%, I think people will be financing Teslas a lot more than expected. So it's an interesting take, and people are divided. That some people do think, hey, Elon's really alienating people, and the brand is not what the brand used to be. But I think there's a deeper part to this than just the brand itself. So, and that would be interest rates. And so we'll see over the next 6 months what it ends up turning out like. Eric says, great interview with Vlad. Sure was a surprise. Thank you for being here, Eric. Again, at 5 p.m. or 4:45, so in about 30 minutes, we're going to be reacting to the interview live on the channel. So for those that didn't get to see it, you'll be able to see it with me. And for those that did see it, we'll get to watch it again. This will be like my 4th time watching this thing. So I'll get to share all the details of how this thing went down. All right, let's talk about SoFi. I didn't get to show you guys my SoFi position this morning either. So let me pull that up. I forgot to show that at the end of the stream. So let's do SoFi, and then we'll talk about the upgrade here on SoFi. So let's pull this up. Okay, so this is the SoFi position I have going into earnings. So we have 215 contracts expiring 2026. We're down 3% on this right now. So we're down $161. The average is 23 cents. Current price is 22 cents. These are $17, $20 call debit spreads. I bought the $17 call. I sold the $20 call against it. So I bought a call and I sold a call to capture the premium from the sold call. It creates a delta between the two at 22 cents currently. I paid 23 cents. My bet is that if SoFi can get, as you can see here on the simulator on Robinhood, this is one of the best features. If SoFi can get to $10 after earnings, this would be what, April 29th? The contract should be worth of a profit of $3,063 or a return of about 60%. Given what they announced on earnings, I might keep the position because if SoFi gets to $20, if we go to the logical extreme by 2026, this thing can be worth 1,000%, which means it would be a max profit of $59,000. So we would take 5,000, turn it into 60,000 by 2026 if SoFi gets to $20. I don't know how realistic it is to say SoFi is going to be $20 by 2026. I think it is very possible. I know Noto's incentivized to make it happen because that's where all of his options are. But I'm not sure. If SoFi, however, gets to $10, it still does pretty well. The only reason I wouldn't sell this after earnings is if I see something in the earnings that shows me the sentiment is going to change for this company and that they're really on the right track. I think they're going to crush earnings, but they need to have an earnings that really shows the market, hey, you got to put a little bit more respect on our name so that there is a lot more potential for SoFi going into the future. Now, having said that, today we had an analyst called Kyle Peterson who has a 57% success rating from TipRanks, who said a couple things about SoFi. So let me read a little bit from this. We view SoFi as a long-term winner in the digital lending neobank space, largely due to its focus on prime and subprime consumers and possession of a full banking license, which we believe provides the company superior unit economics compared to other consumer finance platforms that focus on lower income borrowers and or lack of a banking license. $10 price target. Did he say anything else? No, that was the quote. And so this is Kyle Peterson. That was the main quote. And the other thing they just wrote is that SoFi began as a lender focused on refinancing debt, but now includes 3 different segments: lending, which is student and personal, home, financial services, technology platform. So they largely believe that in the neobank digital space, lending space, SoFi is going to win. Now, they don't mention that much about the financial services platform, but I do believe that's another component of the valuation. They gave $8 to the lending platform. It's a sum of the parts valuation, and $2 to the finance platform. Now, the finance platform, which is Technisys, Galileo, etc., that thing is going to grow about 20% year over year. That's what management guided for. If they can get that to 25, 30%, I don't know how possible that is, but if they can do that and the street can start seeing it as a bit of a more of a software kind of SaaS company, especially because we believe they're working with a very big finance bank right now, powering their APIs via Galileo and Technisys. if they can get that bank, I believe the bank is rumored to be Citigroup or Citibank, one of those, they should be able to get more. And if they can get more, you're talking about a lot of different forms of additional revenue that are not just lending in the context of SoFi, which is why the SoFi Robinhood comparison is always weird to me, because Robinhood is a brokerage, SoFi is a bank, and it has a fintech B2B software offering to other banks. But SoFi competes with Robinhood on the brokerage portion, which is what gets people into the product. So I understand the competition there. But at the end of the day, they're different businesses, and so they kind of operate in a different way as well. So look, this is very encouraging. My thoughts on this are that hopefully I got the fucking bottom. I really hope I got the bottom on this thing, because if I got the bottom and SoFi crushes for the end of the year, these options could potentially do very well by the end. I think SoFi can get to $12 by the end of the year. I think if market sentiment shifts, rates come down, and SoFi just crushes on their earnings, I think $12 is not crazy from $7. So that'll be really good to see. And if it happens, then that'll be good for SoFi. Overall, SoFi, they had a good day. They had a great day, and now they just need to keep up the momentum. Earnings will be on April 29th, and we'll keep going from there. Tanner, what's up? Thank you for being here in the chat. He says, bro, a Robinhood retweet. It was insane. Yeah, Robinhood did retweet to the podcast along with Vlad. So that was pretty cool. So this is the tweet here. So Robinhood retweeted it with some fire emojis. They also commented two goat emojis underneath this thing. And then Vlad said, from one fan to another, thank you for having me on. It's pretty cool. It's pretty cool. I'm excited to react to the interview with you guys. I thought it was really fun. It was a great setting as well. It was great quality, great audio. I was talking to my guy, Dan, who did the entire video for this thing, and he just crushed it, dude. He just crushed it. He said he would get it back to me a day after the interview. So we did the interview on Wednesday. He said he would get it to me on Thursday last week. But the files were so big, dude. He sent me like a 9 GB file. It was a really big file. So I was like, dude, I'm pretty sure you're like knee deep into trying to get this thing to happen. So take your time. He got it to me within a couple of days, and the pod went live today. So really happy that he worked hard. I was just texting him. He was like, I am so familiar with your voice now, because he's switching between 3 different camera angles. And that's what makes a podcast really good. If it's on video, you want to see different angles. You want to see my reaction when Vlad says something. You want to see Vlad's reaction when I question him on something. And so they put in a lot of work, and his team was just awesome. His team was really awesome. I'm happy you guys enjoyed it. We'll talk more about it in about 20 minutes. The feedback I'm getting in my messages is that people really liked it. And the biggest thing I was concerned about was the flow of the interview good? Because after I did it, it felt good, but I didn't have it for a week. So in my head, I'm just, every night I'm sleeping, I'm like, yo, did I ask that question right? Was that question good? Did I speak too fast there? And I think I'm my biggest critic after listening to it about 4 times. And I will critique it during the pod when we watch it live in 20 minutes. There were like 4 or 5 things I would have done a little differently, but the vast majority of it, I do think it was a smooth interview and the flow was good. And because of that, I think it was a pretty good interview. And now we got to get ready for the next one and just keep it going and just keep working to make this happen. Okay. Bank of America believes that S&P still goes to 5,400 by the end of the year. Let's listen to them, and then we'll keep going from there.
The U.S. equity strategy, Savita Subramanian's here. S&P target of 5,400. It's great to have you, Savita. Welcome back. Your notes have been like an endorphin drip last couple of months, because you've talked about broadening.
Yes.
No euphoria yet.
Right.
Does the gut check this week change any of that?
No, I still think that we're on track for gains throughout the end of the year. I mean, obviously, we're just a few percentage points away from our year-end target, which we just recently raised. But I think the net message of all of the data and the signals and the analysts and everything that we look at and listen to is up rather than down for the S&P. And the idea here is, I mean, when I look at positioning, I don't see euphoria. I see kind of cautious optimism, maybe on a few themes like AI or, GLP-1s, or, now it's shifted to power. But I don't necessarily see this broad-based bullishness on the market. In fact, if you look at the average mutual fund, the average active manager, their beta relative to the market is the lowest we've seen since 2008. If everyone was looking for a bull market, they would be long high beta stocks, and they're not. So I think we're still in that kind of wall of worry phase. I would still say the direction's up from here. You recently went to 250 on earnings for this year. We did. Next year we're looking for like about a 10% incline on earnings next year. And the idea is we're tracking solid earnings growth. We've had margins remain surprisingly flat, not down.
So her argument there is that earnings are going up. Now, Steve Cohen, the guy who runs a very big hedge fund, Point72, he also has said the same thing, right? He said, look, earnings are going to go up. Maybe margins are flat, but those operating margins are likely going to increase over time as AI becomes an enabler for revenue. And things will go a bit higher because the market is not as hot as everyone thinks it actually is if earnings are going to start to get stronger. And so Stephen Cohen, they manage $31 billion. I'm looking at it right now. So this is a guy who doesn't do a lot of interviews. He was on CNBC today saying, I don't think we're in a bubble because AI is real and the markets are helping. So from that perspective, I do think that we probably have some more momentum left. Okay, so Dan just texted me. Dan, the guy I was talking about, the one who did the audio and video for this Robinhood interview. Dan, let me just say live, because now that you're watching, thank you so much. I've already said it to you on text messages today. We'll react to the interview in like 5 minutes. We'll pull it up. But Dan's watching, and he was like, I don't even know how to invest. So maybe this is a good thing that I'm watching you not live on YouTube now. I love it. He does audio and video for Robinhood. He does everything for this, for the company when it comes to that. And about a week ago, we coordinated this whole interview. And on Zoom, I hope one day somehow I can introduce you guys to Dan. I don't know if maybe I can interview him or something about his life, because Dan has one of the most amazing personalities on the planet. And from that Zoom interview, I was like, I can't wait to meet this guy in person. I was so happy he flew up to New York to do the interview. And just the way he talks, it's like, you think my humor is kind of, eclectic. His humor is eclectic on a different level. So I knew we were gonna vibe really well. And then when I got to the studio in New York, the whole thing was set up exactly how I wanted it to be. So he did an amazing job. And so Dan, if you're still watching this, thank you so much, man. He's the absolute world to me. All right, so that's the end of the market close. We talked about the macro data. We talked about Tesla. We talked about SoFi, and we talked about Jay Powell's comments today and why banks are still bullish like Bank of America for the end of the year. Let's react to the Vlad interview. So put in the chat if you've watched it already. I'm actually curious how many of you guys have seen it. If you haven't, then that's great. You'll be able to watch it with me. If you have seen it, then we'll be able to watch it again, and you'll be able to get my input as we watch it. Quick thing I'll just say before we get started. The way this went down is one of Robinhood's team members contacted me when I was doing the market open a month ago. And when they contacted me, they just said, hey, do you want to interview Vlad? And as soon as I got that message, I was like, yes. Now, when this stuff happens, I have been in business for enough time to feel that things don't get done until things get done. Whether it's deals, whether it's contracts, investments, people say yes to things, and the ideas are great, but if the execution doesn't happen, the execution doesn't happen. So I messaged the person back. It's one of their senior policy communications people. And I said, yes, let's do it. And they said, okay, do you have an idea for the interview? And then at that moment, I was like, I want to make this a Lex Friedman type of interview. I don't want this to be, hey, zoom into the channel, I'll ask you about the Q4 results. I want it to be like a good interview. I want it to be strong. I want it to be, something where people get to humanize the person I'm talking to a little bit more. And so I pitched that as the idea. And she came back to me and she was like, that's great. Let's do it. And I was like, okay, that's awesome. So now it took her about a week to respond with that. It took her about a week. And that was the nerve-wracking part, because for that entire week, I was like, damn, dude, what if he changed his mind? What if they don't want to do it? What if what if things just don't work out? This is a busy guy. It's a $15 billion company. He doesn't have that many hours in his day to just spend talking to me. But she came back and she said yes. And that is the first time I jumped out of my chair in a very long time. I was sitting right here, just my phone. I get the message. As soon as I get it, I legitimately jump up and I punch the air. It was the first time I punched the air in a long time, because that was one thing I really wanted to get this done. And they were down to get it done. So I'll talk further and deeper about some of the stuff in this interview, but let's get it started and we'll react to it as we keep going from here. So here we go. Here's the Vlad interview for those that haven't seen it, and I'll be reacting in between the interview itself. Let's get it here. Okay, here we go. I have to refresh it. Hold on one second. Let me refresh. Okay, here we go.
Is automated.
And we'll start from the beginning. All right, here we go.
Okay.
Thank you, everybody, for joining me here today. I have the honor to be with and the privilege to be with the CEO and co-founder of Robinhood, Vlad Interview. Thank you for being here.
Thank you for having me. I've been a big fan of your content for quite some time.
It's insane you say that. I can't even believe you're saying that. But
All right, so that caught me off guard. That one caught me off guard, dude. That one caught me off guard. When he said that, I was like, oh, shit. I cannot believe he just said that. That one was like, all right. I tried to keep my composure and just be like, all right, cool. Let's move on. Let's get through this, because I did not expect him to say that live. We were talking before the podcast. He's been reading my shit for a long time. For the past 4 or 5 months, he's just been reading through tweets and stuff. He actually really pays attention to how people are thinking about Robinhood itself, which he should, because you're the CEO of the company. You're trying to maintain the brand. So I'll tell you guys more, but that part caught me off guard. That was cool.
But I've been a fan of your company and your product. It's funny. You've been a fan of my content. I've been covering the company for the past 5 months. I've been a fan of your product for the past 5 years. I got access to Robinhood in 2019. I was in the back of business class. I wasn't really paying attention to what the professor was saying. I was on a website, a dinky little website called Robinhood.com. And for the first time, I bought, I think, 100 shares of a $4 stock. And in that moment, it's going to sound cheesy, but it was one of the most monumental moments of my life, because it taught me about equity, taught me about ownership. It taught me about, like, wait a second, now I have to care about this company. They have a CEO, they have earnings calls. I have to listen to these guys. And it happened because of your product. When I say something like that, and I know that experience is universalized for millions of people, how does that make you feel that your product introduced me to the markets?
It brings me a lot of joy. And a big part of it is because that kind of mirrors my own experience. So I became interested in investing when I was a teenager, in 1999, right at the height of the .com boom. And I was an only child. My parents both worked. Summer vacation, I was like at home on the computer, right? And I basically discovered Yahoo Finance Portfolio Builder, and I built my own portfolio, and I was doing very, very well. In part because it was 1999, everything was just going gangbusters. And so I had like Yahoo stock and all the companies that made products that I used or had heard of. And that's how I learned to invest. And I remember my parents were like very encouraging of this hobby. They're like, wow, this is, you actually...
Did your parents understand the markets? Did they know what the stock market was and investing?
They knew in principle, but they had also never invested before.
Right.
I mean, they were kind of discovering it at the same time, because we had immigrated from Bulgaria, which didn't really have a functional stock market.
Right.
And, for a while, they didn't have very much money, and investing wasn't accessible to people without a ton of money. So it was sort of 1996 when my parents started working, and we kind of discovered it at the same time. So I remember my dad created an E-Trade account with me. It was a custodial account, put some money in it, let me manage it because I was doing so well with my simulated portfolio. And I bought this company, 3Com. I don't know if you've heard of 3Com, but they made the original Palm Pilot. And I had the same experience as you. I owned the 3Com shares. I was like tracking the price, but then I started getting the proxy materials and the shareholder communications.
Now
and
you
I
have to
really
care.
felt like an owner.
Right.
And then it went through a company spinoff. So it spun off Palm, and now I had 2 stocks, and my money like increased. I think it close to doubled. So then I learned what a spinoff is and how all these corporate actions work. And I think that really began my lifelong journey and interest in investing that continues to this day.
So before the pod started, I asked Vlad, hey, do you like know options? Like, do you actually understand put credit spreads and debit spreads, all that stuff? Like, do you know the internal intricacies of options themselves, right? Because you're running a platform all built on options. And he told me he almost got a job as an options trader in Europe before he started Robinhood. So this guy really understands the markets. He also has a master's in math. So he's not just like a CEO who understands company building and like, how to scale startups. He actually understands the financial markets very well. Now, he's not allowed to like trade individual equities because all the conflicts of interest. But in his early 20s, he understood derivatives really well. And so this guy was kind of destined to be in the finance lane in some capacity, just given how into it he was when he was a kid.
So my parents are from India. They immigrated here as well. They had no idea what the stock market was, wasn't what investing was. They were busy trying to, put a roof over me and my sister's heads. And because of your product, I'm now gaining the financial literacy to educate them about the markets. My mom opened up her Roth IRA for the first time at 53. And it was an emotional experience when she put money in and she realized like she had something that she was really saving and building. Do you also think my generation getting access to the markets is helping educate our parents' generation that just didn't know about it?
I used to say this a lot in kind of the early days of Robinhood because I think Robinhood might be one of the first financial products that actually gets shared from child to parent rather than parent to child.
Yep.
Because it is just as much, if not more so, a technology product. And younger people tend to be early adopters of technology. They're using new apps, new interfaces. And since financial services and technology, I mean, fintech's like a relatively new thing. You can kind of look at the word fintech on Google Trends, and it's very much sort of in line with Robinhood, right? Fintech wasn't really a thing when we got started. People didn't know what to call us. And so Robinhood, I think, became one of the first products that kids would actually share with their parents, and it kind of goes up a generation rather than being handed down and you using your parents' wealth manager or their advisor. And I think that was a powerful thing. A lot of people learn about Robinhood through their kids.
Okay, so tell me how you brought this idea to life. There's probably a lot of
Okay, before we get into that, so one tidbit, because you guys are here watching with me. So me and Vlad were talking before the interview, right? We were getting to know each other. That's what I think made the interview really well, because for those first 20 minutes, we just got to vibe and relax. And he brought up the fact that he's been reading my content for a while, and that he said my analysis is, just as good as some of the people on the street. And he said before we did the interview, one of his internal people said, hey, maybe you should be cautious of doing an interview with someone from retail because that could hurt the brand. And he basically told that person politely to not worry about it, if you get what I'm saying, right? So he really campaigned for this interview, because I just straight up asked him, I was like, yo, did your team come to you with this idea, or did you want to do it? Like, I just explained, I was like, how did this happen? But this was off the camera. And he was just like, no, I wanted to do it. And I had to like fight with my team a little bit because they were saying maybe it's not the best for the brand. But in my opinion, I was like, well, if we're going to talk to these guys on Wall Street, guy also is doing good analysis. Why don't we talk to him? The thing is, though, he's been particular. He hasn't done a sit down interview like this in over 2 years. The last time he did one with retail investors was back in 2021. It was a podcast called Earn Your Leisure. I watched it a couple of weeks ago. It was not a good podcast. The questions were horrible. They didn't understand the business. They were asking questions like it's like they did no research on the guest. And you could tell Vlad was visibly kind of just like annoyed at the questions because they weren't good. So I think he's been hesitant to do retail interviews for a long time. Obviously, the brand took a big hit after GameStop. And so it's taken them a while to get back to this point. And so because I think the company is in a new direction now, he's ready to do the interview, and he really campaigned to do it internally, because with these public companies, they're so afraid of everything that could happen legally and all this stuff. But he got the approval, and then we got the job done.
Entrepreneurs listening, people that want to build startups. I mean, Robinhood at one point was an idea, it was in your head. Today, it is a public company that's listed on the stock exchange. I mean, like, that is just it is a rock star thing to do, but to get there, you have to do a lot of stuff. Jason Calacanis gave you a check, angel investors. How did you actually start and then eventually bring this to get to the public markets?
It took a long time. And actually, my co-founder and we started a previous company in New York, which was an algorithmic trading business. So very different than Robinhood. The customers were extremely sophisticated institutional investors, and the trading platform was an API-based trading platform where the value prop was the lowest latency in the industry.
Wow.
So we had a trading platform, and we were competing on latency. It was the metrics was tick to trade latency. So you get a market data tick coming in, and our platform kind of takes that market data, consolidates it, hands it back to the strategy, and then receives the order and sends it out to the exchange.
How old were you when you started that?
I was 2009, so I would have been 22.
Wow.
22. And yeah, this was measured in microseconds at the time. So the lowest latency platforms had a tick to trade of single digit microseconds. And what we realized was basically our customers were placing billions of dollars of volume per day. They were trading, millions of times a day. And the cost of doing that was basically nothing. I mean, there was a fixed cost in managing the platform, but with like 3 or 4 people, you could manage that activity since we were automating the lion's share of it. And then I moved to San Francisco to start our West Coast development office. And I was at a party actually in San Francisco where I was explaining to some of the people there, we have this business, we're helping institutional investors, we have this low latency software, we place millions of trades a day for essentially no cost. And this guy was like, oh, wait a minute. You're telling me you can place millions of trades a day at no cost. Why am I'm paying $15 per trade in my...
I didn't know this story. So I had a party. That party is where he figured out, holy shit, I can bring this to the whole fucking world. And that's what led to the inception of Robinhood.
Schwab account.
Right.
Like, why can't I use your software? And at first I was like, no, that's ridiculous. You have to be really sophisticated to use my software. You basically need to be a software engineer and you're coding up these strategies. But then we got to thinking, why are people paying $15 a trade? Like, that doesn't make any sense. Can we use the same technology and the same infrastructure and really the same idea to take the advances that electronic trading made on the institutional side and give it to retail? And my co-founder and I also were just, this was around the time that Steve Jobs launched the iPhone and the iPad. That's like our coming of age time. And so we always just wanted to launch a consumer product that could touch millions of people. That was very attractive to us. So once we sort of like got into this idea and started thinking about it, it became all consuming, and we sort of like pivoted all of our energy towards launching this consumer product.
Who was the first check into the company?
There were a few people. So we raised on convertible notes. And there were a few people that came in the initial round, which were sort of contacts that we had made through our previous business from the algorithmic trading industry. So Michael Rauchman, who was the CTO of GetGo, Dave Babalek, who's a former GetGo person as well. And GetGo, not a lot of people remember it, but it was sort of like the market leader in algorithmic trading. They really pushed the markets towards being electronic, and were the leading market maker, in the 15 years ago. So those guys came in. Google Ventures, we were, I think, one of the first Google Ventures checks. I still remember getting that. They invested $250,000, and Google had actually rejected me when I applied to be, I don't remember if it was a software engineer or a data scientist. So a couple of years later, Google Ventures backing my company. I remember when I got the call from our partner there, I was like, you have to be like very stoic and not show emotion when an investor is telling you that they want to invest money in your company, because you don't want to seem too eager and they can negotiate and get a better price. But I literally dropped the phone, and you could kind of hear me telling Beju and the early team that was assembled in the Palo Alto garage space. And we were very excited to get that first investment.
So when you raised that first seed round, obviously the company started doing well and grew. And I think 2014, 2015, you launched. When you launched, you guys had some massive growth. I mean, growth that is unheard of. And most companies in the public markets don't even really grow. A lot of startups, they grow, but then they end up failing, right? 99% of startups fail. You guys hyper scaled. And so my question here is for the entrepreneurs, the startups that are listening, what was that process like when you have 10,000 users go to 1 million users in like a few months? How did you guys manage the day-to-day of actually scaling in the early days?
Shout out to Dan. That was a nice camera switch, right? From there to there. He spent a lot of time, the guy who edited this, who works at Robinhood, That was a really good camera switch right there from the close up at the end of the question. So that was great. Shout out to Dan.
The entrepreneurs, the startups that are listening, what was that process like when you have 10,000 users go to 1 million users in like a few months? How did you guys manage the day-to-day of actually scaling in the early days?
I think that the really interesting thing was that,
by the way, that pause was good as well. So instead of Dan getting rid of that pause because it was dead space, because you could see his face and you could see he was deeply thinking about how to answer the question from the inception of the journey, that was a good pause. This is like interview podcaster geeky stuff, but it's so important to really giving a good experience.
we had tried a bunch of things up until the point that we launched the initial Robinhood waitlist that weren't very successful. I was talking to you earlier about the analyst app where everyone could be a crowdsourced stock analyst. I mean, we had a hard time growing monthly active users there. Maybe it got to like the hundreds of monthly active users, and we had to scratch and claw our way to keeping those users engaged.
Right.
And so when we launched the Robinhood waitlist and went viral on Hacker News and on Reddit, the last thing that we were expecting was that we would have this viral product announcement with tens, hundreds of thousands of people lining up, because we just never experienced that. And then I think we just had wind at our backs since that initial announcement. And to a large extent, up until a couple of years ago, we were just sort of like capturing that and evolving it to its conclusion.
So by Series D, I think you guys are already a multi-billion-dollar company. How did that feel, knowing you have a multi-billion-dollar startup before you go public? Like what was your mental state at that time?
I remember when we were in New York working out of an apartment, and we were just sitting and talking about how big our business could be.
Right.
And we were like, man, can you imagine if this company could be $25 million? Like, that would be insane.
Right.
That seemed crazy to us. But then you kind of get on with building the business, right? And we had 1 million people on the wait list. And
I wanted to ask this question because I was like, dude, like, this is some rock star shit to take an idea that was worth a couple million to be 15 billion. And that Series D, I think they were valued at like 6 to 7 billion, which, by the way, that was their market cap at $8 in December, right? That's why the opportunity was so massive, in my opinion. But like, how did it feel to be worth a couple $1 billion as like a 30-year-old guy? I mean, that's pretty insane. And now I think Vlad has 55 million shares, stock close to 20. He's a billionaire again. I think below 20, he's not a billionaire, so he's closer to that range. But as it passes $20, given his share count, he's going to be a billionaire again.
1 million people on the wait list allowed us to get a Series A. And our first Series A was, I think, we raised $13 million at a valuation of 70 million. And I remember a few of my friends wanted to invest in the company at that point. And I was like, man, I don't know, $70 million Series A. I really, I thought to myself, okay, in the seed, I would take some of my friends' money because these are small checks, and worst case scenario, I could pay them back the money, right? And the friendship, the friendship would probably be intact. But then we started getting to $70 million valuation. I'm like, I don't know. I really don't want to get ahead of the skis. This valuation might be a little high. And then, of course, you work really hard to take the next step, and it takes a couple of doublings and triplings. You get into some big numbers. But I think people adapt to the circumstances, right? So it's sort of like fun for a day, you celebrate it, and then you're kind of thinking about what's next.
Back to work.
So it's a little bit, I really have to remind myself that it is a pretty magical journey, and I do have to kind of reflect on it. But I think my tendency is just to, okay, now the expectations are this, I have to exceed those. And pretty much you get to these big numbers, and it's like, how can we become
even bigger,
the biggest financial company in the world? Like, can we think even bigger? And I think we've been around 10 years. It's pretty crazy to imagine, but the mission wasn't so expansive in the past, right? It was just about
No
launching a
commissions.
really cool app that allows people to trade commission free on mobile.
Right.
We didn't really talk about democratizing all of finance for everyone in the world, but customers wanting more from us sort of like getting more practice and learning and building up the scar tissue from all the mistakes that we've made and all the products that we launched that didn't really work out very well. The ambition grows, and now we just feel confident we can do much more.
Well, I mean,
Okay, so that was the first 15 minutes. So after those 15 minutes, I think that was a good grasp to get the interview loosened up, to get him kind of just, feeling comfortable, to get people to hear his origins and his story of how he built this company. Now we get into the real nitty gritty, dirty stuff of what Robinhood's doing to try to disrupt. And so we'll break it down as we get into the new stuff. Now we're going to get into the gold product announcements.
in terms of doing much more, you guys just had an event. Thank you for the invite last night. I got to attend the event.
Yeah.
There's a lot to talk about in this event. The part that blew me away, it dropped my jaw to the floor, and I think a lot of people have told me the same, is you guys are giving a 1% match on every dollar that is deposited on Robinhood. Now, you started this 1% brokerage transfer match about a few months ago, and I thought it was pretty genius because I have some pretty high net worth friends that use Schwab and Fidelity, and they took all of their money. We're talking about tens of millions of dollars, and brought it onto Robinhood. And you bring $1 million, you get $10,000 for basically.
By the way, a bunch of VCs on Twitter, public VCs, they did the same thing. So a lot of people were doing this.
Just switching to a different platform. It was a genius idea. And then when you guys ended it, I was like, all right, so that was great. They got some customers. I don't know if that's sustainable. Now you're doing it unlimited to everyone. The biggest question I got yesterday when I talked about this on Twitter was, okay, we've seen a lot of companies promise, to give 1% APY. These companies end up going bankrupt. They lose all their money. There's court cases. So how do you guys afford to do this? What are the unit economics on making this real?
Yeah. So first of all, we're very scientific about all of these decisions. So we don't make investments, whether they be marketing investments or products, without there being like firm data backing it. And of course, sometimes we'll take a leap of faith and experiment. But if you think about the history of how the deposit match, which has really become a much bigger thing than when we initially launched it. If you think about the history, it started off as a 1% IRA match
Correct.
for the retirement accounts, just on contributions, right?
Right.
And the thesis was pretty simple. The thesis was, let's say you look at Robinhood's revenue over the past 12 months, it's a little bit under 2 billion, depending on how you compute it. And assets under custody, give or take 100 billion, right? So if you look at revenue yield, so revenue over assets under custody, it's roughly 2%.
Correct.
So let me just break that down for people that didn't get it. He's saying that revenue over assets under custody, that is the yield they can get. And that is pretty similar since the history of Robinhood started. So they have 100 billion under custody. They did about 2 billion in revenue. So there's a 2% yield. That yield on their assets under custody is how they're creating the deposit match. So for everyone was like, how are they going to do the 1%? It makes no sense. They're going to go bankrupt. 1% is half of the yield they're getting in terms of revenue over their assets under custody, which means if they grow AUC, they can grow the yield they give to customers to bring their assets onto the platform, because they're giving you 1% on top of your assets that you bring onto the platform. And the sort of mathematical formula is the larger assets grow, the more yield they can give. In this case, if there's a 2% yield, they can crack that in half and give you 1%. And that opened my mind up also thinking, oh, this is how they're thinking about it, because I didn't even fully understand that, but I thought that made a lot of sense.
So 2% of the assets turned into revenue for the business on an annual basis. And that number there's been a little bit of fluctuation here and there, but it's been pretty consistent over time. It was right around 2% in 2020 and 2021 as we had large asset growth on the platform. So the calculation would make sense if we're generating 2% in revenue yields on assets, giving 1% for retirement contributions, theoretically should have worked
The
out.
math works.
Particularly if those retirement assets are incremental. So there's a lot of unknowns. How incremental are they? Are people just going to take money that they would have deposited in their taxable account anyway and move it into retirement?
Right.
Obviously, if that happens, it could affect the economics. Is the mix shift of activity going to be different? And what we found was, when we rolled it out, the economics and the asset growth to some extent exceeded our expectations of the program. And so then we introduced the 1% match on ACATs and rollovers. And then we thought to ourselves, and actually I was a big proponent. We've been thinking about how to grow gold for quite some time.
Right.
The decision from that point on, once we had the early data from the 1% contribution match, to do 3% on rollovers and contributions into IRAs was pretty straightforward.
Yeah, I mean, this was really exciting to me because from my understanding, Robinhood did achieve GAAP profitability last quarter. And if you guys wanted to do 1% for deposits going in forward, my first thought was, well, they've done the math on this. If they were already profitable on doing this before, there's a chance they think they can retain that profitability because the unit economics and math makes sense. And as you said, if the yield you're getting, because so many people are putting so much money onto the platform, maybe there's a way they can actually make this work.
So again, a couple things on that. That's a really important thing to understand for everyone who's concerned, like myself. How do they do this 1% match? 100 billion assets under custody, give or take. 2 billion, give or take a little bit on the revenue. So to use those numbers in simple terms, 2 divided by 100 is 2% yield. People are saying, how do they get that 2% yield? That's just the division between 2 over 100. The 2 is the revenue they create. So the more you grow assets under custody in this type of a business, the more you can increase revenue. If they can get that 100 billion to 200 billion and the yield can become 4% versus 2%, then they can potentially give half of that or even more than that based on whatever they want to do back to the customer. And the customer, by the way, is taking that money and keeping it on Robinhood for at least 2 years in the terms and condition. So all of the money they're getting on top of their assets under custody that they're giving back to the customer in the 1% deposit match, it's not like they're struggling to find that money. That money is the money they're making based on the AUC, and then they're giving it to the customer that has to keep it on the platform for 2 years. So if anything, that money is going to be valuable to them over the life cycle of those 24 months, because they'll be able to monetize it in another way. So to me, that made a lot of sense, and I think that's one way to sort of understand the math behind how they're doing this 1% gold match.
Do you think the 1% deposit match means that if you're using another broker, you're really missing out?
Yeah, I do think so. I mean, if you think about how, they do this math in the Boglehead forums, because us giving you a deposit match is akin to a higher return on the assets that you're investing in, right?
Or even a raise for your salary.
Exactly.
Yeah.
So just economically, it's a valuable proposition, even for folks that, especially for folks that are engaging in this kind of lazy Boglehead, set it and forget it type of investing. Right. And I think that's why, if you look at the forums that last night's announcement was kind of going viral in, I mean, it was a nice discussion in r/Bogleheads where they're like, okay, now they have the IRA match, deposit match on ACH transfers, deposits in the platform. Tell me, how it makes sense to not have my ETFs just stored on this platform,
on Robinhood.
All of my ETFs. And, I think that there's some wood to chop to earn back some of the trust that we admittedly lost through the meme stock stuff. And some people they have a bad impression of Robinhood, and from both sides, both because of us having to restrict trading because of the capital requirements, and also because people just associate Robinhood with meme stocks.
Correct.
They say, okay, you guys enabled that activity that we just don't find very, long-term oriented. But I think over time, the product experience, the economics, the fact that we're actually diversifying and offering all of these long-term passive products has done quite a bit to change the brand and shift it over to one where you can imagine your very serious retirement money being safe at Robinhood and it being a great proposition for you to keep it there.
Let's talk about that. This morning you said that it took you guys 12 months, about 12 months, to go from 0 to 1.5 billion in retirements assets under management. In under 90 days, you've gone from 1.5 billion. Today you revealed to 4 billion. That to me does not sound like a meme stock trading app. That to me sounds like people that are trusting their financial future with you guys. I mean, can you speak on where you think the future of retirement is going and how that's going to generate, more substantial revenues ultimately for the business?
I think the thing about retirement is it's long-term money that's sticky. Customers are retiring for decades. They choose their IRA provider with the intent of kind of growing that nest egg bigger and bigger and bigger over time, and rarely, if ever, withdrawing from it. And if you look at the overall individual retirement account market, it holds the bulk of the assets, right? There's 14 trillion, give or take, in individual retirement accounts in the US, much bigger than 401ks, and close to $1 trillion gets rolled over every single year from employer-sponsored 401k plans into IRAs.
Correct.
It's in the high hundreds of billions. So, I mean, we're proud of the progress that we've made, but there's a lot more wood to chop before those trillions in assets make their way to Robinhood, which excites me because there's just lots more to do. We're going to make the product better and better. We hope to see the acceleration in asset growth continuing. We've been pretty happy so far, but there's a lot more to do. And the roadmap that team has is just chock full. There's just so many things that we have left to build there to make the product even better.
Right. And I think it goes back down to product because I maxed out my Roth IRA on Robinhood for $7,000 this year. And I was going to do 100.
By the way, my mom got mad that I brought this notebook. She wanted me to bring an iPad. And I was like, I didn't want to bring an iPad. I wanted to physically write on something. And the day I called her after the interview, she's like, you took the notebook. You were supposed to take the iPad. Notebook's unprofessional. I was like, Mom, it's a notebook. It's not the big deal. So that's the biggest thing my mom was freaking out about. It was hilarious.
And I was going to do 100 a week, 200 a week. And then it's in the middle of the app. I always press it and it says, hey, you got 5,000 left. Why don't you just, and I was like, all right, there you go. And so I think the product itself incentivizes you to save for retirement, which is the literal opposite of what some of people are accusing the product of being in terms of meme stocks. And so I think it's a really, really good decision. 5% APY. I understand the business model because I've studied the company pretty extensively of how you can afford to give people a 5% APY and still make money.
Yeah.
For those that are listening that have no clue how Robinhood gets you 5% on your money, maybe they know a little bit about interest rates, but how do you guys afford that as well?
Yeah. I mean, that one's pretty straightforward because we actually collect a spread from the partner banks. Partner banks give us a rebate because they're capable of generating even higher yield. So I think the number is 560 or 570 on average.
Right.
So it is a profitable business for us. We pass back the majority of the yield to customers. And there was sort of a promo where some customers would even get 5.25.
Yep.
But yeah, on every dollar that's deposited, we actually do make a small fee that gets
and
passed
that adds up
directly from the partner banks.
Right. So you use a network of partner banks, and then you're able to pass most of the unit economics onto the customer. X1. All right. So you guys unveiled a credit card, 3% cash back. Before we get into the actual card, how did this acquisition go down? I want to know the behind the scenes. Did you call these guys? Did you send them a DM and hey, I want to buy your company for $100 million?
Well, so we had.
By the way, I think they raised 20 million. So I think Robinhood got a phenomenal deal because the company raised 20 million. Let's say valuation was maybe 70 to 80 million. Robinhood paid maybe a 10, 15% premium to acquire the company. And that X1 is what the gold credit card is today. So they got a hell of a deal on that company. And now they're going to see if they can really grow into it, becoming a really big credit card.
We had talked to them through the years. We saw that they launched a wait list for the X1 card, and it was very well done. I don't know if you've played around with the original X1 card. I was a customer of X1. It was my primary credit card for some time.
Oh, so you used this product before you guys bought the company?
I used the product, yeah. And they had this really awesome like they care about design and user experience. They had this awesome animation on the home screen of their website where you could see the card dropping, and they recorded the sound of the metal card dropping, and you could just replay it over and over again. So it was very well done, and they'd raised a whole bunch of money. About a year, I guess it was about a year ago now, we had the banking crisis.
Right.
We forget about this, but a whole bunch of banks went belly up.
Right.
Silicon Valley Bank, massive behemoth, Signature Bank,
Credit Suisse.
yeah, and the credit markets contracted, and they had a hard time growing the business in that environment. And so we were very fortunate to be able to partner with them at the time where, you know, they needed access to the sort of balance sheet and capital and resources to grow their business that Robinhood could offer. And, you know, I've been very passionate about credit cards for quite some time. I've been thinking about building a credit card for many years. And I think that when I started talking to Deepak and Sid, and we were really thinking about what we could build, it became clear that these guys want to build an awesome credit card. They want to leave footprints in the world too, and build something that people talk about and millions of people use.
Right.
And I think we both realized that if we did that together, we had a path to doing that relatively quickly. Like it wouldn't take years.
Right.
It actually
Especially
took
with
less than
Robinhood's,
1 year.
especially with your distribution already.
Yeah.
The reason I asked that question is because I think some people think, oh, they just launched the credit card to launch it. It seems like you've been doing research. Now, you were a user of X1 for years before you bought the company. And you guys have been thinking about the credit markets, which people in finance know is one of the most profitable business in the financial sector. And so that's how you came up with the idea, 3% cash back. Biggest question I got yesterday, everyone loved the idea, but credit cards are pretty risky. There's a lot of delinquencies, defaults. How are you guys philosophically thinking about mitigating credit risk?
I think we tend to be pretty conservative when it comes to these things. And I mean, one of the other reasons why we really got excited about acquiring X1 is they built an awesome credit team. Diego Cerruti, who's chief credit officer, led credit at Nubank. And you know, Nubank, very impressive company. I mean, they've really redefined credit in emerging markets.
Yep.
And a lot of that philosophy and kind of how we think about credit, I think Diego and his credit team brought to Robinhood. So we bring a lot of that experience and the DNA, and we're also planning on rolling this out prudently. So we're not going to be rash about it, but we're pretty confident that the economics are going to work out for this business on a standalone basis, not even taking into account the gold ecosystem effects.
And the innovation here for the card is you don't look at credit score, you look at income.
Well, we look at a variety of things, income being one of them. And I think it's really lots of innovations, several innovations at once. I think it's pretty unique that this type of premium card can be accessible to lots of people. I mean, premium credit cards like this typically accept less than half of their applicants.
Correct.
We're saying all you have to do is be a gold member. We'll get this card to you. And, you know, that requires a lot of work on the back end by the credit team. It also, I think, sets us up very well to make this not just a great credit card for people that are transacting and paying off their balance in full. I think those people will use it. Makes a lot of sense.
Yep.
But it's going to be a great card for people that are building credit and starting their journey with credit in the early days as well. So imagine if you're a college student, or you know, you're an immigrant at a really good university. And I ran into this all the time when I was at Stanford or UCLA, like very, very smart people with very clear earning potential. And you know that their cash flow is going to be strong. We're not qualifying for credit cards because they didn't have the credit history. And so then you get these starter credit builder cards that are really not very good. Like most of them don't even offer any rewards
Most of them
or
suck.
cash back.
They suck.
They're plastic.
Yeah.
You know, and then you use this starter card to build your credit, and hopefully in 2 or 3 years you can qualify for the nicer card. Yeah, and we thought, can we make a starter card that actually gives you 3% rewards and helps you build credit? And I think we realized that that's actually a really powerful thing. So I don't think it's just going to be used by people that are transacting and paying their balance in full, but it'll be a great tool for credit building for the whole family. And that's
So the key takeaway there from the credit thing is that they've assessed the risk, and they have a guy who led credit cards at Nubank who joined the company. So Nubank, Latin America, a lot more delinquencies, defaults, a lot more harder to navigate. They have kind of the right leadership and management in place. Number two, they've been pretty scientific about it, and they're looking at what the unit economics could be. They're going to have to mitigate risk effectively, but I think out of all companies that are going for this, given how sticky their deposits are, they have a good chance to do it in an effective way. Last thing I'll say on this is that the 3% cash back you get on the credit card, there's one button you press and it goes into your brokerage. I think a lot of the money they're giving away in cash back is going to come back to them in the brokerage, because it's just going to be like, oh, I have $100, $50 here because I bought food last week. Let me just throw it into my brokerage and let it get 5% APY sitting in my brokerage. So I got 3%. I get 5% of my APY, and then I get 1% for depositing something into my brokerage. That's 9%, because, and he'll go deeper into the podcast talking about how Robinhood's vertically integrated. That's what allows them to do that. But that is where I think the credit card really can succeed over the long term as well.
That's what got us excited. And that's actually pretty innovative as well. So it's not just the rewards, not the design, not the digital experience, but the fact that we're making this one singular card that can serve a wide variety of customers.
And to access that, I mean, this is laughable. It is $5 a month.
Well, you have to pay for the annual fee or the annual gold plan. But yes, it's incredibly inexpensive.
And do you guys plan to keep this at this cheap of a rate just to get market share? Is that the idea there?
Well, I wouldn't say that. I'm gonna we do occasionally test pricing, and we try to understand like what pricing makes sense.
Right.
And we have debates about this. I mean, internally at Robinhood, really smart people were debating all the time. They're like, this is crazy. People would pay $50 a month for these types of features and this type of functionality. We could raise the price. And my tendency is to generally like be very protective about the price, because I really love one of the best business stories to me is how the Costco founder, Jim Sinegal, price of a hot dog at Costco has been $1.50 since the early 80s, right? And ever since, anytime anyone even like threatens or suggests raising the price of that hot dog, Jim Sinegal's like, I'm going to kill you if you even talk about getting that price above 150.
Right.
I think that creates a culture where that subscription is amazing. I mean, we learn a lot from Costco and Amazon Prime and these great companies that have built these great subscription businesses where you just have an expectation and a loyalty to the brand that you kind of know you're getting an awesome deal.
Right.
And maybe in some cases you get better deals for individual products, but by and large, I think customers have this expectation that if Costco has a product in their warehouse, being a member gives you that peace of mind that you're getting an unbelievable deal, and the experience is quite good. And that's how, I still shop at Costco. A lot of my friends, regardless of their income, you could be, very, very wealthy person, you're still going to Costco. You could be someone that is actually, in need of buying things in bulk and not be as wealthy. It's still valuable for you.
I have said for the past couple of years, Robinhood's moat lies in UI and user experience. And I've had debates with friends who say, that's not a moat. Are you kidding? Like, that can be copied. And I'm like, yeah, that could be copied. A product can be copied.
Yeah.
A product experience is very difficult to copy. Do you think one of the moats of Robinhood is that product focused experience that you have for the end customer?
I've been surprised, frankly, that the user experience hasn't been copied better. I mean, it's sort of like
That part had me dead, dude. That part had me dying because we gotta know the companies he's talking about. And I was just like, so do you think UI user experience is a moat? And he's like, to be honest, I don't know why these motherfuckers haven't just copied us. Like, obviously our shit is addicting, but no one's copied. He himself is like, okay, yeah, UI is probably not a moat. People can copy it, but no one's copied it. So I guess it's a fucking moat. Like technically Spotify shouldn't have a moat, right? There's YouTube Music, Amazon, etc. But people still use Spotify. Why? Because they just like the app better than the other music apps. It's a moat to an extent. Maybe it's not the strongest moat, but it's a moat. And so basically right there, Vlad's saying like, yeah, probably shouldn't be a moat for us, but it is because no one else is copying us.
like,
Wow.
and I don't know exactly why that's the case. It's sort of like they copy it halfway.
Yeah.
The app kind of looks like Robinhood, but then it's just really slow. And
You see me dying right here, right? You see me dying because I know the app that's slow and that, it's not that good. And Vlad's just trying to be like, yeah, the app's just not that good, dude. It's just not that good.
sometimes they have kind of web views for some of the screens. I don't think it's just the user experience. I think that if you look at the things that we've had that have taken a while to replicate, a lot of it is business model innovations where we're kind of, it's sort of like innovator's dilemma in a sense, like classical disruption. We start by offering something at a lower margin than competitors are offering. And at first, competitors are kind of resistant to it. Because think about free trading as an example. And I think this example also applies to the IRA matches and all those products. But for free trading, if you're an incumbent brokerage, like let's say, TD Ameritrade, since they don't exist anymore, right? Or Scottrade. So when Robinhood came along and we started offering free trades and they were offering $9.95 trades, the initial reaction was, we don't want that customer. That customer is going to be unprofitable for us. It's all new customers with no money that are signing up for Robinhood.
Yep.
And what they were afraid of, why they couldn't match the economics, was because they were worried about all the existing customers that were trading. So you can't actually offer free trades to new customers and keep charging your existing customers $9.95. They would get incredibly upset about that,
right,
and they would demand that same pricing. So what they're seeing is a large existing customer base with a very large amount of revenue. The prospect of that going to zero is unpalatable. I mean, these are public companies, and you justify that by saying our customers really appreciate the service. We have a lot of them. They don't seem like they're leaving for Robinhood. They seem pretty happy, even though they're probably leaving at a slow rate that compounds over time. And then, after 5 years, we were getting 70% industry download share and, all sorts of trading market share. And it became so big and threatening that they had no choice but to respond. Right. But by then it was too late. We couldn't be, we had already gotten to the point where we were large enough that we had a sustainable business. IRA match is similar. It's very painful for a broker that has $7 trillion in client assets to face the prospect of paying 1% on that $7 trillion to keep those assets there.
That's why you think Schwab and Fidelity can't as easily do the 1% match.
It's very difficult for them because once it gets out that, Schwab is paying you 1% to keep your portfolio there.
Yeah.
I mean, that type of news travels fast.
Yeah.
Right.
That's a big deal. That's a big deal. Schwab has $8 trillion under custody. Robinhood has $100 billion. Schwab has 35 million accounts. Robinhood has 24 million. So Robinhood has 68% of the accounts that Schwab has, even though they have 72x less the amount of AUC, which is why it's kind of Vlad's talking about this innovator's dilemma, true disruption, That is the position that Robinhood is in right now to capitalize on.
So I think that's going to be difficult for them, and they're going to be reluctant to do it. And they might do it in lighter ways here and there. But yeah, I think it's disruption in the classical sense. And then I think there's ultimately this all comes down to technology and engineering, because how are we able to offer lower prices? We're much more efficient. We're operating a fixed cost technology business with no brick and mortar branch office locations, very little overhead.
Right.
And the things that are really difficult to copy are fundamental technology innovations. For example, the clearing system that we built from scratch, from the ground up. Not a lot of people talk about it, but that allowed us to vertically integrate our entire stack on the brokerage side.
Clearing means someone puts a trade and you guys actually execute for them.
Well, we execute the trade through market makers, but clearing is basically all of the post-trade stuff. So that trade gets executed, and eventually the shares have to move. They have to be, custodied, or we custody them themselves.
Right.
And of course, there's T+2 settlement. So we have to coordinate with the central clearinghouse and move the shares. All of this stuff that is automated in crypto with blockchains, we kind of do with our clearing system.
And so you guys vertically integrated that in a way that actually saved costs, essentially.
Yeah, because clearing firms that offer a service, like the Apexes, for example.
It's ironic he talked about this today because SoFi put out some email saying that if you don't log in, you have to pay $25. That's because of Apex, which is a third-party firm that charges SoFi if customers don't use it for some reason. I don't fully understand exactly why, and I don't understand why SoFi couldn't somehow get around that. But because Robinhood's vertically integrated, they don't have to deal with those fees and then put them on the consumer, which makes it more user-friendly at the end of the day.
They have to generate revenue too. So they're taking a percentage of the cash interest. They're taking a percentage of the stock lending revenue. And since we do that in-house, that allows us to keep most of the economics. And then 24-hour market is another example.
Yeah, so you tweeted a chart.
So
You tweeted a chart the other day. I mean, so you can look at Robinhood underneath the ticker in the 24-hour markets and see the volume of how many people have traded a certain stock. And some of these stocks I go to, there's like 100,000 shares traded from 8 p.m. to 9 p.m. Eastern.
Yeah.
And what is the philosophy there? And is that also just great for growth? Because like your business hours were from 9 to 4:30 or 9:30 to 4, and now you have 24 hours to theoretically make payment for order flow revenue.
Yeah, well, actually, our margins on the extended hours are lower than core hours. The reason we really did it was, we wanted to do it from the very beginning. When we sat down and sketched out what the ideal equities trading experience would be, fractionalization was a part of it. 24/7 was actually the goal. I don't think markets should ever close.
Right.
I think we have to kind of jettison the last vestige.
If markets never close, I would never sleep. So maybe it's okay that markets close.
Of East Coast New York working hours, because everything's electronic anyway. So we just knew we had to get there. We knew that this was a big part of it, and it almost, the goal with it is this should be a big differentiator for people using Robinhood. You should feel like, you actually are at a disadvantage if you can manage your risk 24/7.
24/7, yeah.
And your platform doesn't offer that, but Robinhood does. Because if you think about it, let's say something happens, you want to close your position, manage your risk. Your assets are at risk at a broker that only has limited market access. So our thought was, this is a big differentiator. It's a technology innovation. It's clearly not straightforward to copy because it's been out for about a year and it hasn't really been copied yet, because it's actually hard. It's not like changing pricing. And I think as we add more and more of these, the technology moat becomes bigger. Clearing, I think, does create a sustainable competitive advantage for us. 24-hour market, that infrastructure, the card business. We actually, not just through X1, but through operating a debit card business and making sure that our money movement rails and our fraud controls and all of that infrastructure is robust. It's been battle tested, right? Because we launched this product, Robinhood Instant, which now is standard. A lot of companies have replicated parts of it, but what that does is that gives you instant access to your cash, even though there is some risk of a customer stopping that bank transfer.
Right.
It takes several days. There's also, with crypto transfers, you have to have really buttoned up risk and fraud controls, because once someone transfers crypto out, it's gone.
Right.
There's no calling up your counterparty and reversing it like you can do with the traditional financial system. So the more products and the greater surface area we built there, the more pressure put on our risk and fraud infrastructure. And in order to offer the low prices sustainably over time, like our solutions there and the technology have to be really, really good. And then that accrues and is amortized over every future product that involves money movement,
right?
Which tends to be the majority of them. The majority of the economics of these products are really affected by how effectively you can minimize fraud losses and reduce friction.
January 2021, this was a wild time for you as a...
Okay, I'm going to go pee real quick, but I'll let this play. This was his response to GameStop. So here's what he had to say.
Human being. You were on every TV show on the planet, and obviously a wild time for the company. After everything that has happened, I still see, I would say 3% out of the 97% of positivity people have towards Robinhood. There's 3% that have a negative affinity for the brand. And the things they say is, I will never use this product. I don't trust Robinhood. And there is nothing they can do to get me back. What they did was horrible. I can't deal with them. Those people are going to be watching this. What is your response to those people in terms of how they thought of what happened and what you're going to do to try to get them onto the platform?
Yeah, I mean, first of all, I completely understand why people would have this impression that, we were colluding with hedge funds and market makers and, holding down the trading. I mean, I was kind of following this whole story as an observer before Robinhood was very much in the middle with the trading restrictions. Yeah, I mean, if you kind of have to think about my motivations as a business person, not just a human that loves trading and free access to markets, of course, if it was possible to allow people to trade unrestricted, that's what I would have wanted to do. I mean, everything about the Robinhood brand and our business model and the revenues and how much our customers use us and care about us, the bedrock of that is customers trusting us and our intentions. So I think it was really unfortunate that we weren't able to communicate as effectively as we could have to kind of stop the misinformation narrative around the collusion. And I think it still pervades to this day. People are just convinced that, we were colluding with hedge funds to somehow suppress this.
Certain movies don't really help to change the narrative.
Right. They kind of allude to it. Right. Yeah. And I do replay that and think, okay, like, could I have said some magic words or communicated a little bit better so that we could clearly articulate what was going on?
So what would you say to those people to come back to the platform?
I mean, I think that also the unfortunate thing is, since so much of this was made possible by Robinhood, and Robinhood was kind of the platform that everyone was downloading, even though other brokers did the same exact thing because they had the same issues, we sort of got the lion's share of the attention.
Which is true, dude. I mean, like, I know Robinhood got the main share of the attention because they were the brokerage that, like, kind of people used the most to buy GameStop, but other people did it. So as much as people hate Robinhood, you've got to hate the other guys if you hate Robinhood. You can't just say, oh, well, the people that were on Robinhood got screwed the most. People on Schwab and Fidelity got screwed too. Everybody got screwed. So if everyone got screwed and it wasn't just Robinhood, you can't isolate the company. In my opinion, logically speaking, it's not fair to blame them. You can still be upset about it, but I don't think you can just singularly blame Robinhood. But that's what people have done for the past 3 years, which is why the brand has taken a big hit.
And I think that's kind of the price of market leadership to a certain extent. You're kind of the Robinhood became sort of like the personification of the failure of U.S. equities markets to work that day, even though it was bigger than Robinhood. What I'd say is hopefully the real story of what exactly happened and the fact that it was a collateral issue is a little bit complicated to understand, and I can understand why people wouldn't want to get into the details behind it. But I think that could be better explained to customers. And other than that, what I'm focusing on is making the service as reliable as possible. The balance sheet has been strengthened, which will hopefully give customers the comfort that if we were in a similar scenario with high volatility in stocks, that we would handle it much better. And otherwise, just keep shipping amazing products and let the value speak for itself. If we keep improving the user experience, giving people more value, then eventually I think they'll start to understand that, and more mileage and more time spent making progress and kind of building this company and showing success across all environments and through multiple years, I think will also help alleviate some of the customers' concerns there.
Yeah, I think that's the answer. I think the product announcement you guys did yesterday, keep shipping. Like, to me, at the end of the day, people's memories, they're fickle eventually. And when they have a product that's just so amazing, at some point they're gonna, have to realize, well, maybe I should actually get 1% on every freaking dollar that I put onto this platform. I want to do like 4 or 5 rapid fire questions, so 30 seconds to a minute in your answers.
Sure.
Crypto, just how do you philosophically think about the concept of cryptocurrencies?
I think it's very powerful. It has the potential to completely reorganize how the financial system works. We talked a little bit about settlement. The cost of settlement on a crypto public blockchain is close to zero. The cost of creating trading infrastructure drops close to zero.
Right.
So I think very much in line with our approach of using technology to lower costs for investors. I do think there needs to be more integration between the traditional financial assets that people find valuable and the world of crypto and the infrastructure. And I think Robinhood can play a role in making that happen.
The UK launch, how is that going? I know some customers are saying there's no ISA, there's no margins, there's no options yet. Do you guys think that can be a really big market for you as you bring more of those features?
I think one of the things that when we look at the UK launch that's got us very excited is that these customers resemble Robinhood customers in the US. So if you look at the behavior, it's pretty similar. And as we talk to UK customers, they want things that we have in the US. So I think international expansion, the thesis behind it at Robinhood is the core platform can be used to extend and expand internationally with minimal customization. And the customization that we need is around the edges.
Right.
Like, instead of a 3% IRA match, maybe we do a 3% ISA match.
Correct.
With gold, right?
Yeah.
But it's really around the edges and with things like tax wrappers. And the fact that customers want options, they're asking for crypto, they want an ISA with a great match, they love 24-hour market, and they love the 5% AER on cash. I think those are all really positive things that tell us if we just roll out the products that we currently have in the US into the UK, which is mostly a regulatory process of getting the right licenses, then we'll be in good shape. And then there's platform level things that we know customers are asking us for that actually benefit the US and every other country.
Right.
Those are like multi-currency wallets. So you can hold your pounds and your dollars in one account. It's going to be useful for US customers too, because they like to trade currencies and hold different currencies. And so there's a lot of wood to chop in the UK, but we really love what we're seeing.
If that goes well, is Canada on the,
So for the people that were saying, they don't have ISAs, options, margins, this is a really hard thing to do when it comes to international expansion. But it looks like that's on the list. It's just going to take some time, given trying to expand with a financial product is just not the easiest thing to do with regulations.
You don't have to say specific countries, but is the rest of the world? Because I have a lot of people saying, when is Robinhood coming to Singapore, Asia, etc.?
Yeah, absolutely. Yeah, I mean, this year we're focused on 2 things. One is rounding out the product suite so that we deliver all these things that customers are asking for. but also expanding to new jurisdictions. And we've kind of built the machinery already to expand. And the cost of getting into a incremental jurisdiction is going to be much lower than what it took us to get to the UK.
What's your favorite book?
Ooh, I try to read a lot. I like math books.
Dude, when he said that, that's when I knew this guy's a fucking genius. This guy reads math books for fun.
Yeah, I still read math books.
You still read math books, like
I do.
proofs
Yeah.
and shit like that, like
Proofs. Yeah.
Okay. All right.
Sometimes I like pick up my
I sucked at proofs when I was in high school.
old college textbooks or my grad school textbooks.
Okay.
I
love
really
it.
like the book that comes to mind. I recommended it to someone recently. It's a book about the double slit experiment. Have you heard about this?
I've not.
It's called, I think it's like through two doors at once. It's about the fundamental sort of paradox in quantum mechanics, which is the double. It's sort of a very easy experiment to run, but it's the double slit experiment, which is you basically have a wall or a screen with two holes in it, and you're shooting electrons through it, and then you can kind of see do they make particle sort of pattern or waves, and in some cases they make particle patterns, in some cases waves, and it's just sort of like the big mystery of quantum mechanics. How can these electrons go through both holes at the same time?
So instead of Brave New World, this is what you like to read. I love it.
Yeah.
It's great. It's great. What's your favorite movie?
Of all time?
Yeah, I know it's Dumb Money, but what's your actual favorite movie?
I'm gonna tell you guys a joke at the end that I made after the podcast, but I'll tell you another joke that I made that was off camera.
I have so many, but if I had to pick one that I kind of come back to time and time again, I'd probably go with Back to the Future.
Okay, that's a good one. That's a good one.
I said that's a good one, and I've never watched it, but I was like, you know what? That's a good one. So I was just like, yep, it's not awkward. I've seen Back to the Future, hasn't everybody? Yep, that's a good one. Moving on. All right.
Great Broadway musical too.
Last two questions. What or who is a public CEO currently that you admire and look up to?
I mean, I think it's a little bit trite, but I've been saying it for 10 years. Every time I get this question, I pretty much say Elon Musk.
Wow.
Yeah.
What was it surreal when you guys were on Clubhouse together talking?
It was. Yeah, that was unbelievable.
Yeah. Last question for you, Vlad. Thank you for giving me your time today. I know you're a really busy person. Robinhood to me is one of the only companies on the planet that is living up to a financial mission that they're putting out there. You guys want to democratize finance. And the event I saw last night, what you guys have done over the past 5 years, someone like me whose family knows not much about investing, and I have now been given access to the capital markets because of your platform. You've democratized finance for me. What is motivating you every day to keep building Robinhood?
I mean, I think that to me, democratizing finance is a very lofty goal, and we're nowhere close to it, right? I think that.
You think you're nowhere close at all?
No, very, very early in that journey. First of all, we've still taken our first steps outside of the US. We're pretty much still a very, very US company. There's all sorts of products and services that are left to build. I mean, we're just taking the first steps into credit, but there are all sorts of different credit lending products that customers need and we could help with. Wealth management. I mean, we're still self-directed platform, but we know there's a lot of customers that want a little bit more assistance and help in managing their investments, building their wealth. And I know that there's a lot of awesome products and services that I get access to because, you know, I have the benefit of, you know, larger assets and more access to these things. And
Basically, I'm fucking rich. That's what he wanted to say, but he couldn't say that.
like to give those to as many people as possible. So I think the roadmap is full for the next mean, multiple decades.
But that's a real mission. Vlad is rich, right? Because he's built a company, so he has access to a lot of financial instruments. The majority of the world isn't. So if they could pay $5-6 a month and get potential access to things like what he and people in his net worth have access to, that is a real mission that I think if you can execute the tech side of it, is something that can really be a big market opportunity over the next decade.
As far as we can see, there's a lot more innovations that we've got in the hopper that we haven't even talked about yet. Like every day, it's just really motivating coming to work with these folks, and they all really care about democratizing finance, and it guides all of the decisions that we make. I think it's why people come to Robinhood by and large. We get people from the traditional financial industry who, find it refreshing that we don't just care about making money and padding the bottom line. And we have engineers that, they feel very directly. A lot of them are immigrants, and they know how important money is. It's sort of like the number one topic that you're thinking about all the time as an immigrant. And, they want to apply their engineering skills to solving these problems. So it's very exciting to me. I think there's so much to do, and I love building products. I love talking to customers. And I think most of all, I love working with this group of people, super dedicated, mission driven, and they move incredibly fast, which is also very exciting for me.
CEO and co-founder of Robinhood, Vlad, thank you.
Thank you, sir. And I actually have something for you.
This part was wild, dude.
I heard you were asking about a gold card.
Oh boy.
So this is actually a solid gold piece of jewelry.
Wow.
So you can't actually spend on it, unfortunately, but it'll give you an idea, and hopefully you can.
This is real gold, right?
Hopefully
here.
you can have it as a little memento of the event and this conversation, and we can figure out. It can hold you over until you get a real one to spend on.
This means the world. Thank you so much, Vlad. Ladies and gentlemen, Vlad Tenev, CEO of Robinhood.
Thank you.
That was pretty cool, dude. That was pretty cool. That part was pretty cool. That was dope. That was dope. I don't care how much gold goes up in value. I'm leaving that thing forever. That to me is basically one of those like things that hopefully I'll get to look back on many years from now and be like, that was one of those moments where, you were building and you were doing what you had to do. So Vlad right here tweeted from one fan to another. Thank you for having me on. He did another tweet that I just retweeted. He responded to the interview with this meme, with this GIF. That's Arnold Schwarzenegger, right? That's Arnold. What movie is that from? This has to be from a movie. That's definitely Arnold Schwarzenegger. So that was a nice GIF. I retweeted it. I don't know what movie it's from, but I retweeted it. And yeah. So overall, dude, the feedback I'm getting is that people seem to enjoy Predator. Okay. Predator. Okay. Look, I haven't watched Back to the Future. I haven't watched Predator. Sue me. Okay. I've watched Inception. I've watched Interstellar. I've watched Dark Knight. I watched those. I like Nolan. I even went to the theaters and watched Oppenheimer, even though that movie was not that good, but that's what I watch. Okay. And then I watch YouTube. Like I'm sorry. I haven't watched all the movies that everyone loves to watch, but nonetheless, no, it was fun. It was really, really fun. And I think the feedback I'm getting, so genuinely, I am critical of myself, and the feedback I'm getting from the interview, I'm getting a lot of messages, a lot of texts. My mom's also a big critic, right? Like she'll tell me, hey, you're speaking way too fast here. Like after the Meet Kevin interview, there were some portions I was a little too fast. Like she told me because she wants me to get better. The feedback I'm getting is that it was pretty good. The flow was good. The structure of questions were good. We asked some of the tougher questions like the UK, why is there no ISA? GameStop, what do you have to say to those people? And then we got to know the background story. We got to know what the future of Robinhood is. We had to have a little bit of fun in terms of how'd you acquire X1? What's your favorite book, favorite movie? And then what are the unit economics, which I think was the most valuable part, in my opinion, of the interview, of how you do this 1% match, 3% cash back, 5% APY. And I think in plain math, he broke all of that down. So from that perspective, I think the interview was strong. It was good. And the feedback I'm getting from most people are saying that they really thought the pacing of the questions was good, which is another thing that I really, wanted to focus on, because if the questions are not paced correctly, You know, like when you do, I mean, I've done an interview enough times to know when it's a good interview or a bad interview. And after this interview, again, I just didn't know if it was going to be a good interview because I didn't have the footage. So it took me a week of just like being aloof, thinking, is this good or bad? And now that I got to see it today about 4 or 5 times, I think it was actually really good. Two stories I want to tell you guys. Number one, the first one was, I told you guys that Vlad kind of campaigned to get this done because some people on his team thought maybe they shouldn't do an interview like this because it would be bad for the brand, speaking to retail. And he basically told them to like no, right? Like he really campaigned to do this interview. So that was a big thing. Another little story is, and I was going to tweet this later, we were sitting for 20 minutes before the podcast started, and one of the team members, some of you guys might have heard this. I think I said this on the Market Open a couple of days ago or something. Well, it says some of the team members were like, "Hey, Vlad, what'd you eat for breakfast?" And he was like, "Oh, I barely slept last night. I didn't get to eat anything." And then I said, "Wait a second, Vlad, didn't you say for breakfast that you were eating Chase's fucking lunch?" And he let out a big laugh on that one. There was a big laugh. Like there was a ha ha ha, like a really good laugh. So that was one of the good jokes. I would not say that live on camera, but that was a fun joke. That was a fun one. So he enjoyed that one, and that was cool. For those 15 minutes, just getting to talk and be friendly and make little jokes before the pod, I think it was really important and crucial so that we could do the pod in a way that was a bit more relaxed. Honestly, I did not feel. Studio says, "You actually said that?" Yeah, dude, I said that in front of everybody. I was like, "Wait, aren't you eating Chase's fucking lunch?" And then he started dying, dude, and everyone else started smiling, all the employees that were there. So he was laughing at that one. Sometimes you got to take the risk and say the joke, and like the joke worked on that one. He liked that one, but I didn't want to say it on camera because you don't want to say the F word and stuff. Like you wanted this to be very professional, but it was good. It was fun. So overall, dude, I think it was good. I think it was strong. I think he liked the interview and he liked the experience of the interview as well. And hopefully that opens up the avenue to getting more interviews. And again, I think us being able to talk and just being able to chill is what allowed me to loosen up and allowed him to get loosened up for the interview. I've done enough of these where you can tell if the vibe is good or not. And there's some really good Pouncer interviews I've done on the channel, like with CodeStrap, with Sean from back in the day, with Sachin. There's certain good interviews that are just like, all right, the conversation is flowing, it's moving. There's really an art to this. Vitaly on the other day, I said, "Yo, I'm an artist." He said, "You have a weird definition of art." In all seriousness, I do think there is an art to interviewing and there's an art to keeping a conversation going. I mean, Joe Rogan is one of the greatest artists when it comes to podcasting ever because he keeps 12 million people every day listening to 3 hours of what he has to say. So there's a way you ask questions that can actually accentuate a conversation in a meaningful way. And the reason I think I have some of those skills is because I did debate for so many years, and the whole part of debate that was like valuable when it came to winning debates was asking the right question to your opponent so that the judge would feel, oh, this guy knows what he's talking about. His opponent has no idea what they're talking about. I'm more inclined to vote for him. And that was one of the things I think I did better at in debate than a lot of other people. In interviewing, it kind of comes in the same aspect, just utilized in a different way. So that's why it was fun. Shem Pasta says, "Have you ever read the book How to Win Friends and Influence People?" No, but I bought the book in 2018 when I was going through a self-help phase. I bought a lot of these books. Didn't end up reading it, but a lot of these books kind of have the same message, which is that you have to listen more than you speak. And when you do speak, there's certain ways you can speak that create the atmosphere for someone to feel comfortable. And there's like real little nuances of this. There's things called strategic concessions where you concede to what the other person's saying and you internalize what they're saying, and then you reassure them of what they're saying by like repeating what they just said, even if it's only for a couple seconds, so that they understand that they're comfortable enough to keep going forward with their sort of authentic thoughts. There's a lot of sort of science and psychology behind this. The problem is there's not a lot of ways to monetize the science and psychology of how to influence friends and people outside of building a brand. Like either you use these skills to like become a lawyer and then you make money through that career, or you use these skills to build something for your own. And when you're building something for your own, call it entrepreneur, media, content, whatever, that is literally you selling to the world why they deserve to pay attention to you or why you deserve their attention. And so that's sort of the ways to utilize those skill sets. But in reality, there's not a ton of ways to monetize it outside of building something or using it in a career. The building part is a lot harder than using it in the career. And so with content, at least that's how I'm trying to use those skills. I think Amit already spark noted the book. Okay. What other questions do we have? Someone had another question right here. Oh, when is the Carp interview? I'm working on it, dude. I'm working on it. It's really hard to get Carp because Palantir is a different animal than Robinhood, especially given all the government regulations, all that stuff. They're a little bit more skeptical to do a retail interview, but I think they will do it eventually. He knows who I am. I told you guys that a while ago. So I think he wants to do it too. It's just a question of when is the right time. For Robinhood, this was the perfect time. First of all, he was in New York. I didn't have to go to California because he was there for the event. That made it perfect. So we got to do the interview right after he did the event. And number two, the sentiment on the company has changed a bit, primarily because they've executed and because the gold event went really well. And so if the gold event was kind of the interview, I don't think would have done that well. But when they announced 1% deposit match, 3% cash back, whole new UI, that really got people thinking, holy crap. I mean, their credit card went viral, dude. Every day I'm recommended a new YouTube video of someone reviewing the gold card. I mean, it's going very, very well for them, in my opinion. And Vlad said they have hundreds of thousands of people that signed up for the wait list. So I think this was the right time to do the interview. And we got to have the right timing, hopefully, for the Carp interview if that ever happens. Okay, that's it for me. Thank you, everybody, for being here. This was really fun. Hope you guys enjoyed it. And I'll be back here tomorrow, 8:45 a.m. And we'll keep this party going. Again, from the bottom of my heart, thank you all for being here. It's definitely very surreal. My mom, she's just proud. And I think as a kid, the only thing you want to do is make your parents happy at the end of the day. So yeah, it's been exciting. It's been super fun. We got to keep working. This is a big moment, but this moment can hopefully lead to bigger moments if we just keep working. And that's what we got to do. This is a very competitive, ruthless career, which is the career of media. I've said this many, many times. It's very hard to win. It's very hard to sustain winning. And it's very hard to build real audience over the long term. But you get some of these moments where if you can execute them on correctly, you can do really well. Well, last thing I'll say on this is I got there about an hour early to New York and I wasn't nervous. Oddly enough, I had slept like 3 hours the night before after the gold event. I took the train to New York. I'm sitting at Penn Station. I had like an hour and a half before, and I'm just sitting down. I plugged in my phone into my Mac, and I'm on my notebook. I was writing the questions that day. I had wrote the questions like a month ago, but I just wanted to get them on the paper. I didn't want to like print out something from Google Docs. And so I'm writing the questions. And while I'm writing the questions, I genuinely did not feel nervous. Like this whole anxiety, your stomach's kind of curling up. I didn't feel any of it. And I'm not saying it to sound cocky because before the Meet Kevin interview, I was actually pretty nervous before the Meet Kevin interview. Like I remember my stomach turning. For this one, I don't know what it was, but I feel like I'd analyzed the company well enough to speak about it. I had already met him the night before. So I was like, okay, he knows who I am. It's not for the first time we're meeting. And in my head, I'm like, I'm going to go in and I'm going to fucking crush this because I need to crush this. This is one of those things where you don't get an opportunity to interview a multi-billion-dollar company CEO where his entire team set up a fucking podcast studio for you, just for you, for an hour. This guy has not sat down for an hour in over 2 years to talk to people, much less to talk to a retail dude, maybe with the Wall Street Journal, but not with me. So I got to crush this. And I think the calmness of knowing I need to fucking execute led me to feeling a bit more relaxed that I'm going to fucking execute. And then hopefully we executed, and now we just got to keep executing, going further. All right, that's it for me. Thank you, everybody. Appreciate it so much. New Palantir contract. Yes, we'll talk about that tomorrow on the Morning Open, and I'll do a video on that tomorrow on Daily Palantir, and we'll keep it going from there. Thank you, everybody. I'll see you guys tomorrow, 8:45 a.m. Bye. Have a good night.